you won't find Augusta Rule necessarily in the tax code. It's under a different section, but what we want to talk about is just high level here. And Brennan, I'll let you get into the particulars of it, but just really, what is it? How do business owners use it? Why use it? And what records kind of need to be meticulously kind of kept to make sure that if it's ever questioned, you can back it up. But give us kind of an overview, again, high level. What is the quote unquote Augusta Rule, and how do business owners use it?
Sure thing. So the Augusta Rule is actually one of my favorite tax planning opportunities, mainly because of its simplicity and ease of access for everyone. So at a high level, the Augusta Rule is the ability to deduct, to get income, rental income, for up to 14 days a year on your primary residence without having to report it to the IRS or pick up income. So one way to look at it is if you live in an area, Tampa Bay market, obviously Super Bowl comes to town or NCAA tournament comes to town and you want to rent out your primary residence, you can rent it out during a period of up to 14 days throughout the entire year. And you don't have to report that to the IRS. So it's free rental income. So that is the typical way it's used. So really taking advantage of the Augusta Rule is for business owners. They have the ability to use their primary residence as an office space or a gathering space for their employees or meetings. And you can actually deduct the rental expense on your business, and at the same time not have to report it on your personal income tax return to pick up the rental income on the other side. Again, the key there is it's a 14-day maximum, so up to 14 days throughout the entire year. You can use your house for, if you have an office party, if you have some business meetings you need to take at your house where it's a little bit more private and you'd rather rent your house than another external office space, you can do that as well. From a reporting standpoint or a record keeping standpoint, it's crucial to keep the date, the business purpose of the meeting, who attended the meeting, things like that. That way, if you were ever audited by the IRS, you'd have those records. And something else to keep in mind, and this is probably the hardest thing, this is the question that I always get when you bring up the Augusta Rule is, well, how much do I charge for rent for a daily use of my house? It's a little bit, I don't think there's a definition necessarily. It's a little bit of a gray area from the IRS tax code, but ultimately, if you use arm's length transaction, meaning you would pay the equivalent of what an unrelated third party would pay you for that day. So you can look on Airbnb and see the nightly rates around your neighborhood. You can look at business, day use or hourly use rental spaces in your area as well to gauge what rental rate you should charge. And ultimately, from a recording standpoint, I would also include that calculation and the support of how you came up to that amount in your records as well. But ultimately, it's an extremely simple tool to use. It's a great tax saving opportunity. We've seen clients that have saved up to $14,000 to $20,000 in a write-off on their business because they have a house in a high rent area, essentially.
Yeah, absolutely. And I think a lot of our business owners are probably having staff things happen at their house, whether it might be a holiday party or something along that line, and not even realizing this could be an opportunity for them. So thanks for walking through that.